Hey guys, and welcome to the Key of Understanding ICT Concepts video here. We're gonna keep it very simple and we're gonna look at the price action of last Friday. So right here, this is Friday's price action, 8:30 news, PPI news release. Then right over here, we have the 9:30 opening, the New York Open. Later, that's basically the AM session. And then right here, we see the PM session. Right now, the chart is pretty naked. I have a awesome tool for that. You can use that, well, on your desktop, and also if you're on the go, literally on your phone, all you have to do is turn on the ICT All-in-One and you see all the important information on your chart without having to use 10 different indicators. And we can take a clear look at price action. We have our midnight level right here, our daily opening, our new day opening gap, our daily divider, Asia session kill zone, the 8:30 opening, and also our new week opening gap. This is just a few of the features that are included in the ICT All-in-One. You can see them all here. You can display previous steps. But this is not the actual secret to understand ICT concepts. This just makes my life 10 times easier on my daily live streams that I do with my Discord community. Instead of having to draw all these things onto my chart all the time, I prefer having them drawn automatically on my chart without me having to do all the work or use tens of different indicators. If you're interested to try out the ICT All-in-One indicator, make sure to check out the first link in the description box below. That takes you to my wob.com shop, where you can request access for a 5-day free trial of the ICT All-in-One indicator. And if you sign up during the month of February, you can use the discount code ICT50 for a 50% discount on the ICT All-in-One. But now let's really get into the meat of this specific video, trying to understand the key to finding success in ICT concepts. And in my opinion, it's really simply using fair value gaps and inversion fair value gaps paired with volume imbalances to frame your bias. What do I mean by this? So let's take a close look at this price action right here. Everything that happens overnight, low volume, lower probability, it still plays out eventually, but we want to be trading mainly here. I'm finding that myself every time I stream live during the London session. It's slow and slowly moving. It eventually still plays out, but I prefer that volatility. And that's actually when we thrive. So let's take a close look at my favorite PD array at the moment. So what would that be? Well, in my opinion, the inversion fair value gap. And what do I mean by an inversion fair value gap? So we start out right, 8:30 news. We don't trade the news. We anticipate and see what happens after the news event. So what do we do right here? Let me actually go into replay mode. We see that news candle. All right, we look at the entire day right here. We already cleared the Asia session low, so we hit sell side liquidity relative equal lows right here. What could possibly happen? Well, what happens is exactly this right here. We continue lower for a little bit longer, take out some more sell side liquidity, and then we start to retrace. And note what we start to leave behind during that retracement. A bullish fair value gap and another bullish fair value gap right here. And we use the highest bullish fair value gap to retrace deeper into our 8:30 liquidity void right here and to retest our new week opening gap. This green area is the new week opening gap drawn by the ICT All-in-One indicator. And we continue even higher, and what do we tap here perfectly to the tick? Our New York midnight open level. New York local time midnight open level, this dashed line also by the ICT All-in-One. We retrace. What do we leave behind? A equal low, but we're still inside this main fair value gap, our highest bullish fair value gap, and we push up higher one last time. This is 925. This is why timing is important. And with that new 930 New York open candle, what do? We take out this high. We reject away from our New York midnight level, our new week opening gap. And now the most important thing here actually is, where do we close? Where does this 5-minute candle close? That's why I'm a huge fan of the 5-minute time frame. That's why I only use the 5-minute time frame for my entries. Well, right here we have a bullish fair value gap. And we've been holding support here, don't we? didn't we? I mean, we retraced into it once, twice, and we continued higher from here. So now 9:30 opens up. What does it do? It takes out a short-term high. Let me mark this up. Short-term high cleared. No, that's the short-term low. Short-term high cleared. We take this out. Leave behind a bearish engulfing candle closing below the highest bullish fair value gap of this little retracement here. What does it turn into at this point? A inversion fair value gap. And what happens on that very next candle? Well, you're right. We retrace into this inversion fair value gap and we reject. We continue to close with a down closing candle. And note, now the interesting part, where do we close? We close below that last bullish fair value gap that, in my opinion, is the only thing that can protect us from taking out our next short-term low. So only if we end up holding support here, I could actually frame price continuing higher. But once I see this 5-minute candle closing below this bullish fair value gap after the 9:30 open, after taking the short-term high here, inside the 8:30 liquidity void, well, guess what? We retested two times, and then we eventually deliver into deeper sell side liquidity. Inversion fair value gaps. Watch out for inversion fair value gaps. It's really crucial. And where would our target be? Well, our first target that we also targeted on our live stream on Friday was right here, our next low, right here at 8:45, this low at 50.30. What else could we target? Well, look for short-term lows to the left if you're going short. Right here, another short-term low, and then the previous day, New York AM session low here at 11:05. We hit all that. This is where you want to take your profits. Once we hit this level, move your stop to break even, because we don't want to end up looking at price turning around and actually losing on that trade after it hit our low-hanging fruit target. And all that would have been delivered of this inversion fair value gap. So if you have two inversion fair value gaps, I would wait for the lowest inversion fair value gap of the retracement to be closed below and then wait for the retest. You don't always get the retest opportunity, but most of the times you do. Or the higher risk entry would be right here for the higher reward into the sell side liquidity pool. But how can we continue from here, still reading price having our edge? Well, we see that we have potential sell side, Asia sell side of the previous day that we could deliver into. The question is, how could we deliver into the sell side? And my answer would be with this bearish fair value gap. That's actually what we tried. We got in at the 50% of this fair value gap because it's a large fair value gap, looking for the continuation right here with our stop right at this candle's high into our Asia sell side for a 1.8 risk to reward trade. But guess what? Price didn't show us that it wants to continue lower. Yes, initially we rejected here, but then we started to go sideways. It's 10:20, always be aware of the time, 10:20, 10:25, 10:30, and with that new half hour, we moved to the upside. So this is 10 a.m. We actually had news at 10 a.m. We form our wick low, we start to retrace, we go sideways, forming essentially our low for the AM session. And note the most important thing right now. What happened right here? Did we close above our lowest bearish value gap in this entire move to the downside? Yes, we did. What happens then? Well, we turn this bearish value gap into a inversion fair value gap. It's that simple. And note now, even more confluence. What do we have right here? Right, a bullish fair value gap inside our inversion fair value gap. Well, and guess what we retested here? The bullish fair value gap overlapping with our inversion fair value gap. And what was our first target during the live stream on Friday? Well, our first short-term high. And then we see we expanded, retesting the inversion fair value gap one more time, rejecting, continuing higher, opening up with a volume imbalance, continuing higher, back into the new week opening gap, opening up with a volume imbalance, and eventually hitting the New York midnight level, our short-term high, our low-hanging fruit target, continuing even higher. Now, once again, using another bullish fair value gap right here as support. We can see that. Overlapping nicely with our new week opening gap. We retest it, we rechecked, we hold above the midnight level and continue back into our daily open and new day opening gap. That's where we started to consolidate and go sideways until the beginning of the PM session. And this is actually what I do every single day in my Discord live streams together with my community. If you're interested in learning that, feel free to check out the links in the video description and get access to the VIP membership this month for a 50% discount, coming up at only 30 bucks. That's a real good offer. So let me actually turn on the executions here. Turning on the executions of last Friday. Well, what did I do? We closed below our lowest bullish fair value gap right here. We entered into the short trade, taking profit right here on the sell side liquidity pool. Well, what did we do afterwards? Like we discussed earlier, I was looking forward to target that previous day's low. We had our bearish fair value gap, so I got short right at the low of the fair value gap and at the midpoint of the fair value gap. When did I get out? Right here, once we took out a new short-term high, because at this point, really what we did was lower low, lower high, higher low. Once we break this point, we formed a higher high, and this would potentially be a market structure shift. So that's where I got out with both of my short contracts. Well, what did I do afterwards? Oh yeah, we closed above the bearish fair value gap right here, the lowest bearish fair value gap of this entire price leg, leaving behind a bullish fair value gap. Let's take the long. Where did we get out? Right at our low-hanging fruit short-term high target. And that's about it. That's when I stopped trading at 11:20. I start trading at 9:30 until 11:20, and that's what I do every single day. And now actually, if you open up the ICT All-in-One and turn on the regular trading hours opening gap, so the difference between the New York session close yesterday to the New York session open on today's trading day, right here, 9:30 open, and this was where we closed yesterday, right here. Well, this is your regular trading hours opening gap. So 9:30 opened up, we continued lower, ran sell side, rejected from here, and we were able to tell that we're not going to continue lower using the inversion fair value gap, retesting it, holding support on a overlapping bullish inefficiency, continuing higher, filling in this entire gap. And once we filled it in, what happened? We look for discounts again via this inefficiency. And then we just consolidated in here. And what happened magically at 1 p.m., the beginning of the PM session, a new hourly opening? Well, we retraced. Note this, we retraced. We could use a Fibonacci retracement level to look for anything specific. Well, at this point in time, you would be thinking, okay, we filled in the regular trading hours opening gap. We closed below a couple of bullish fair value gaps. Let's actually try the short of this bearish fair value gap. That would be totally plausible. We just took a short-term high, we checked off our new day opening gap. We consolidated and now we fail to hold, and this is going to continue lower. So everyone who took a trade right here with their stop loss right here above the short-term high, totally plausible. But now let me actually show you the secret of taking smaller losses. If you see price, so right here in this, let's say relatively sudden drop to the downside after this expansion consolidation, well, what happened here? We enter on this bearish fair value gap, maybe even after 50% if you're smart. You enter at that 50%, but take a close look what this candle did right here. Did we or didn't we close above this only bearish fair value gap of this entire price leg to the upside? Yes, we closed above. We also closed back above our new week opening gap, this green box right here. And what did we do afterwards? Well, this bearish fair value gap turned into a inversion fair value gap. We retested it right here on this candle at 125 and at 130. And for the next 30 minutes, very similar to right here, starting at 30, we continue to expand to the upside using this inversion fair value gap. Continuing up into our new day opening gap, continuing even higher to our PPI 830 open key level right here. And what happens up there? We go sideways, and every time price goes sideways and fails to hold and continue higher, well, most of the time it does exactly the opposite, at least on ES. That's what I've found, and that's what I teach on my daily live streams. So right here, this is our inversion fair value gap that would have given us all the important clues that we need to take the long. Yeah, we maybe take a little loss on the short. Like said, maybe you got your entry right here, placing your stop at the short-term high for 7 points. Well, you could have closed your position right here and instead of 7 points, only take a 3 points loss. And then immediately switch your bias, take on long, and well, guess what? Inversion fair value gap entry, stop below this low, give yourself some room to breathe, target low-hanging fruit targets right here. And now you made 8 points. That's a 5-point net profit, simply by using fair value gaps and inversion fair value gaps to frame your bias. It's that simple. And I don't stop here. Well, what do we do after going sideways? We leave behind bullish inefficiencies. This gets better by the minute. Alright, we close below our first bullish fair value gap right here. We never come back to retest it. We leave our new day opening gap. And then we also close below our second highest bullish fair value gap. Right here at 235. We come back to retest it and we deliver lower from here. And then afterwards, yeah, well, we had a very hectic drop. This happened on a new 15-minute candle opening, 1440, 1445. This is a new 15-minute candle opening and we drop. Well, now that's where the real skill comes in. Where did we drop into? Well, we have a old bullish fair value gap that has been used to hold support. Well, what happens if we extend that over to the right? Oh wow, yeah, we close below it at 250, right inside the macro timing window. We turn this into a inversion fair value gap, and what do we see? Has this inversion fair value gap been respected by the candle bodies? Yes, it did. New 30-minute candle opens up. At 1535, what happens? We use that inversion fair value gap after closing below, never closing back above, to continue lower, overlapping with a bearish fair value gap right here of this hectic drop. We don't have to retrace all the way back up into here. We can simply use inversion fair value gaps and fair value gaps overall as bias to frame our trade entries. It's that simple. And this is the entire recap of Friday's AM and PM session post 8:30 PPI news report. And all I've basically used here was bullish fair value gaps, bearish fair value gaps, and most importantly, inversion fair value gaps to manage my risk. Tell me that this isn't powerful. I wait. And I even forgot to talk about the best part. I mean, why did we turn around here? We outlined this perfectly in the live stream. We said that the easiest target of this inversion fair value gap after taking sell side paired with this bullish fair value gap is going to be this low-hanging fruit short-term high paired with the midnight level. Why? Well, if we take a look at our higher time frame power of 3 candles, we see that we have a 1 hour bearish fair value gap in here. And I said it dozens of times that I'm not sure what's going to happen inside this 1 hour bearish fair value gap. We could have seen a low of the day and we could continue into Monday's high to the high of the week. But that's not guaranteed, which is guaranteed almost with 99%. Once we see this formation here at the low of the day, knowing we have our regular trading hours opening gap right here, overlapping with a hourly bearish fair value gap, overlapping with our 8:30 liquidity void, well, this is the highest probability move you will ever get in my eyes. We fill in the bearish fair value gap, and this actually right here, do you see this line at 5049.5? This is our daily opening level, and look how we perfectly rejected that daily opening level. We never closed back above it after closing below it. Yes, we open right on the level, form our final manipulation, and we continue lower. And what happened right here on the hourly time frame? Well, we have a bullish fair value gap of our retracement, We close below this bullish fair value gap. And guess what happens next? We continue lower from here. And what does this overlap with? Our 5-minute inversion. We already know that we closed below this hourly bearish fair value gap. So we could be even using this fair value gap and extend it out. Let me do that here quickly. Over to the left, overlapping with another inversion fair value gap right here. Wouldn't look for higher prices than a midnight level again. But, well, we have multi-time frame confluence, and this concept works on every single time frame, also on the 1-minute time frame, but I would really recommend you guys to start practicing on the 5 and 15-minute time frame. That's going to be it for me today. I hope you enjoyed watching this video. If you did, make sure to like this video and subscribe to my YouTube channel. Check out my socials on Twitter and join us on Discord. I will be back next week on Tuesday for another live stream. Take care and enjoy your weekend.